In the United States, your credit score is not just a number. It controls your financial life in ways most people don't even realize. From getting approved for a car, to renting an apartment, or even buying a home, your credit score decides everything. It even determines how much interest you will pay for years. But here's the shocking part. Most people are damaging their credit score every single month without even knowing it. And that's exactly why this video matters. Because today, you're going to learn a simple 30 to 90-day blueprint that can help you raise your credit score fast. Let's start with the basics. In the US, your credit score is usually based on the FICO system, which ranges from 300 to 850. The higher your score, the more trustworthy you look to lenders. Now, your score is calculated using 5 main factors. But here's the truth. 2 of them matter the most: payment history and credit utilization. Let's break them down. Step 1. Never miss a payment. Your payment history makes up the biggest portion of your credit score. Even one late payment can drop your score significantly and stay on your report for years. So the smartest move you can make today is simple. Turn on autopay for at least the minimum payment. This protects your score automatically. Now let's talk about the fastest way to boost your score: credit utilization. This simply means how much of your available credit you are using. If you're using more than 30% of your limit, it can hurt your score. But if you really want fast results, you should keep it between 1 to 9%. And here's a powerful secret most people don't know. Banks don't report your balance on the due date. They report it on the statement closing date. So if your balance is high when the statement closes, your credit report will show high usage, even if you pay it later. That's why you should always pay your balance before the statement closing date. Now step 3. Request a credit limit increase. When your limit goes up and your spending stays the same, your utilization automatically goes down, which helps your score. But remember, this is a tool, not an excuse to spend more. Step 4. Never close your oldest credit cards. Your credit age plays an important role in your score. Closing old accounts can reduce your credit history and lower your score. If the card has no annual fee, keep it open and use it occasionally. Step 5. Avoid applying for too many credit cards or loans. Every application creates a hard inquiry on your report. Too many inquiries can make lenders think you are financially unstable, so apply only when necessary and space your applications out. Step 6. Always check your credit report. Sometimes your score is low because of errors, like incorrect late payments, wrong balances, or even accounts that don't belong to you. If you find any mistake, dispute it immediately. Fixing errors can boost your score faster than anything else. Now let's put everything together. Here's your simple 30-day action plan. Turn on autopay. Keep your utilization under 10%. Pay before your statement closing date. Request a credit limit increase. Avoid new credit applications. Keep your old accounts open, and check your credit report for errors. Follow this consistently for 30 to 90 days, and your credit score will start rising. And once your score improves, everything changes. Better approvals, lower interest rates, more financial freedom. If you want my complete credit score checklist, just comment the word SCORE. And don't forget to subscribe, because in the next video, I'll show you the biggest credit card mistakes that cost people thousands of dollars every year.